Hey guys, welcome back. I hope you had a really great day trading today. So today was Thursday, March 13th, and we did have PPI in pre-market, and it came in pretty flat, and we did open right here in SPY, and immediately we started to sell off. So another day underneath the 35 EMA. This level has been an absolute force, bringing us lower over the past 3 weeks, and we dropped down all the way down to the bottom of the implied move. You could see right here, we came out. This was an excellent buying opportunity, or if you trade like me, selling spreads down here, it was pretty scary because we have had such big moves down. But if you trust the strategy, there was definitely some premium here to take today. So we did close just underneath the bottom of the implied move. 552 was the bottom of the implied move. We closed at 551.42. So if you bought puts at open, those would have closed in the money. And if you sold spreads down here, those would have closed up 100%. So SPX, we did open here slightly down. I don't know if we filled that gap. It looks like there's a little bit open, almost an insignificant amount, but we did come back up. 35 EMA dropped us down, and we dropped underneath the bottom of the implied move. 55.25 was the bottom of the implied move, and right under here, we were underneath that level just after lunchtime. Then we came back up and we closed just underneath the bottom of the implied move. So 55.25 was that bottom of the implied move. 55.21 is where we closed. Yesterday we were making higher lows to try and get above this 35 EMA. This morning we gapped underneath and dropped. So another day underneath this 35 EMA. SPY did close down 1.33%. SPX closed down 1.39%. VIX came up 1.78%, and we closed just underneath the bottom of the implied move. So if you grabbed this chart today in TradingView, I did sell spreads under here, and I did end up taking 66% of the spreads that I sold. And I did put the strikes that I sold and bought, and I also put the exact premium that I sold for in there. So check that out on TradingView. My entire position was written out even before I took it. So great day right here. We did close close enough to the bottom of the implied move to really take advantage of that premium. And QQQ, we did open just underneath that 35 EMA. Yesterday we closed right on top of it. This morning we got underneath and dropped. So bottom of the implied move right here at 469. We did get underneath that, and we closed at 468.34. So another place where if you bought puts right here, they did close in the money, and if you sold these spreads right here, they would have closed up. Maybe not 100%, but you would have taken a lot of that premium. QQQ down 1.8%, VXN up 2.83%. We closed just a little bit outside of that implied move. Pretty close though. Definitely within the next day's implied move. And IWM, same thing here. Look at that crazy strong resistance here at that 35 EMA. We did yesterday, we got above it just a little bit. We closed underneath it. Today we got pushed down, and we did get underneath this previous support level right here. Bottom of the implied move was at 197. So we did get underneath that briefly, and then we got back up to close 10 cents above this support level right here. So if we got down here and you sold 197, bought 196, that spread would have closed up 100%. It also would have closed up 100% if you use this support. The 198, 197 would have closed up 100% as well, because 10 cents, an inch is as good as a mile in options. So you could close up 1 penny above 198 and you would have taken 100%. So IWM down 1.49%. RVX closed up 0.14%, so pretty flat right here. and we did close within the implied move. And for as big of a move we had in everything, volatility didn't go up that much. So in VIX here, we're just under 25, VXN 27, RVX 27. So we didn't see a huge pop in volatility, which could mean we could be seeing a local bottom here. We've seen a pretty crazy drawdown here. We are officially in correction territory in the S&P 500, down 10% off of all-time highs, and we could see a technical bounce here. So futures are up right now, ES up 0.75, NQ up almost 1%, and the Russell up 1%. So don't be surprised if we see a little bit of a bounce here. Honestly, I think that would be pretty insane if we had another day underneath this 35 EMA. Anything's possible, but a technical bounce or a relief rally here, even up to the 30-minute 200 moving average, maybe even higher. But that is just my opinion. Obviously, play the chart. And lastly, let's head into DIA. DIA had a huge drop today. So you could see the implied move was 1.61% in each direction, and we dropped right to the bottom, bounced right there, and we did close within the implied move on the day. We closed at 408.78, and 407 was the bottom of the implied move. We are not even close to the bottom of the implied move from the beginning of the week, which was calculated from the weekend off of Friday's close. And look at this 35 EMA, absolute beast of a level. This week alone, it took us underneath that huge 35 EMA, underneath the 200-day moving average, and just kept going down. So do we get a relief rally here after inflation data? Honestly, just looking at this volatility, I think it's definitely likely. So that is a recap of today. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Share this video with a friend and help me grow this channel. And if you want to give back financially, there is a thank you button underneath the video and in the comments section. Alright, so let's go over tomorrow's trading ranges in the video tonight. So this is SPY, and tomorrow's implied move is between 544 and 559, and that is from options. The 30-day average volatility is 538 to 565 and 541 to 563 on Monday's contract. And I'm going to take these arrows back out here, and to the upside, our very favorite level, the 35 EMA. And on yesterday's video, I did have somebody ask in the comments, how do you extend the 35 EMA so that you can see it on all different time frames? So the way I do that, and I do all of these levels manually, so right here off to the left, if you're using TradingView, this is the trend line tool. So if you click on here, trend line, and I just extend it out. And then as the day goes on, I do adjust it as it turns. And now that you have it out there, you can change time frames. So let's go down to the 5-minute candle here. You'll be able to see that level right here. So it does move it into all of the different time frames. So super easy. So that 35 EMA is that first level to the upside. Above that, the top of the implied move is 559, 563 on Monday's contract, and the 30-day average volatility is at 565. Now VIX is at about 25, so we have been having really big swings. So I would look, if you're buying premium, maybe 559 if you're bullish, and if you're selling, I would look to this spread up here, 563, 565. It's a nice $2 wide spread. And we do have the previous resistance right here lined up with 563. And then to the downside, we do have the next level is this blue line right here. Now I'm going to take it to the 1-day candle here. That is off of these two lows and extended out. That puts that right into our trading range tomorrow. Now I am going to switch to SPX for a second because that same level is a little bit tighter and we are actually just a little bit above it. So in SPY it's down here, a little bit closer to the bottom of the trading range, but in SPX that level is just a little bit under where we closed. So this is in SPX right here. So going back to SPY, the bottom of the implied move is at 544, right there with that line I just showed. And then the bottom of the implied move on Monday's contract, 541, and the next support is at 540. And let's do 1 year time frame again to show right here is where that next support level is at 540. All right, so then back to SPX. Implied move for SPX here is between 54.50 to 55.95. 30-day average volatility 53.90 to 56.55. And then the implied move on Monday's contract 54.15 to 56.30. To the upside, that 35 EMA. This is still our main resistance level. We have been hit by this for that entire 10% move down, and off of all-time highs, this 35 EMA has just been absolutely ruthless. It's still a resistance until it's not. If we get above it, start printing some blue candles. 55.95 is the top of the implied move on the day. And the 30-day average volatility, even though VIX brought our trading range down, should definitely be considered because we do still have big moves here. The 30-day average volatility takes it up to 56.55. So if you're looking for a good spread, I would look at these top two numbers to get nice and outside the move. To the downside, we have that trend line that I zoomed out to show. Let's do it one more time. This is on the 1 year daily candle, and that blue line is right here. So we do have some support right here. It's possible to see a technical bounce. We do have oversold on the daily time frame. So that is just underneath us. And if we break underneath that, then 54.50 is the bottom of the implied move. 54.15 on Monday's contract. And it looks deceiving, but these are huge spreads here. From between 54.50 to 54.15 is $35 wide, and then adding on the 30-day average volatility takes it to 53.90. That is huge out here. So if you're selling premium, definitely look more towards these bottom numbers. And then we have the next support at 5,400. And let's look at that 1 year. So right here is where we have that support. And support here, and it's right down here at the bottom of the trading range for tomorrow. All right, so good stuff. QQQ. We do have an implied move over here between 461 to 476. 453 to 484 is the 30-day average volatility. That makes it about twice as wide. And then on Monday's contract, 457 to 480. Really wide spreads here. And to the upside, 35 EMA. Huge level. And if we manage to get above it finally, 476 is the top of the implied move. 480 on Monday's contract. 484 is the top of the 30-day average volatility. And we do have a pretty decent sized bear gap above our trading range tomorrow. And to the downside, 461 is the bottom of the implied move. 457 on Monday's contract. Next support is here at 448. We are dangling unsupported underneath the 200-day moving average with a bear gap and next support at 448. So definitely an interesting trading range. All right, so that was QQQ. And let me zoom out to the 1 year time frame, see if I missed anything. Next support, that's that 448. You could see it right here, and it was a previous resistance before that. So really wild stuff. On this daily time frame, you could see we still have a red signal line and really no sign of a turnaround here in the indicator. We definitely still have room to go lower. And let's go back to 30-minute here. All right, so that was QQQ. Then we have IWM. IWM, we have an implied move over here between 194 and 202. 30-day average volatility 192 to 205 and 193 to 203 on Monday's contract. We are sitting right on top of that 198 support. I'll zoom out in just a minute. And then to the upside, 35 EMA. This has been an absolute beast level. 35 EMA, every time we've come near it, we haven't had even one blue candle. I don't know why I'm feeling it for tomorrow, but if we get above it, 202 is the top of the implied move. 203 on Monday's contract. 30-day average volatility takes it to 205, and we have a bear gap right above that. So maybe a little bit of selling pressure right in here. And if you're selling spreads, I would say probably look to 203, 205. A nice $2 wide spread right there probably would be a great one. And to the downside, we do have 194, bottom of the implied move, 193 on Monday's contract, 192 is that 30-day average volatility, and next support is at 191. So selling spreads down here, I would look to 193, 192, and if you're buying, if you're bearish, maybe 194. And lastly, DIA. DIA is completely outside of the implied move set at the beginning of the week, and we only have weekly contracts over here. The Dow has been looking really sickly this week. We did have that 35 EMA get underneath the weekly 35 EMA and then the 200-day moving average. And not only was that 35 EMA resistance, we didn't even touch it. We started turning away before it, and today we didn't even see that level. So 35 EMA is right there. The top of the implied move is actually right here, and that is 414. And then the top of the 30-day average volatility takes it a little bit higher right here to 417. I didn't even add the numbers in here. Okay, so then to the downside, the bottom of the implied move is right here, and that is 404. And then the bottom of the 30-day average volatility takes it right to that next support. I'll zoom out to show that in just a second, and that is at 400. So that is DIA. Let's take that to the 1 year. And so this is that 400 right here. So you could see it was support here. We saw a little bit of a support here. Previous to that, it was resistance. So while I'm on the 1 day time frame, let's look at, I take that back. Let's take all of these on the 5 year. This is the weekly candle. So tomorrow's the last day of the week. It does look like we're going to be closing with a big red candle across the board, but this is DIA, and you could see right here we have had 2 candles here, 1 candle here that was red, and then we were able to get back above and go for another run. Now this is just my opinion, but the more likely scenario is that we see this 35 EMA as resistance. So if we pop up this 35 EMA, we could see as a resistance to bring us back down to the mean here with the 200-week moving average. we're a bit overdue to meet back up with that level. And looking below, we have a red signal line and a rejection right here. So that is something that we saw right around here. So keep an eye on that. I'll be bringing this chart back up. I know from a day trading standpoint, it doesn't matter quite as much, but I like to keep an eye on this stuff. And the 35 EMA is a huge level. And IWM, I'm just doing the 1 week candle really quickly. Here we did just hit the 200 week moving average. So last time we hit the 200 week moving average, we chopped around that level sideways for, it looks like, I'm gonna say a year, but it could be longer than that. Yeah, so 525 days. So about a year and a half of sideways. We did chop around that level while we waited for the 35 EMA to come back down, and then we did start another run once we got the 35 EMA above it again. So we did just hit that level, and then I'm going to switch it over to QQQ. Here we did print our first red candle in, let's measure this out, 776 days. That is huge. So the last time we printed a red candle was back here, and you can clearly see after that 35 EMA turned into resistance, brought us all the way back down to the 200 week moving average. So that would be right here. And of course we didn't just drop down to that level from that first candle to when we actually saw that last red candle, 358 days. So about a year to get down to this 200 week moving average, and clearly not in a straight line, huge volatility on the way down. So then SPX, we also have our first red candle here, and same thing over here. We print one candle, we get one chance to get back above. One candle here, and then we got above here. If we see a pop up, act as if this is going to be resistance, and really fast, let's measure that out. That would be a 4.5% move to get back to the 35 EMA. So that could be a pretty sizable relief rally, and we don't have to have a relief rally. I think we're going to see one, but the markets are not loving Trump's tariffs. So we could certainly drop a little bit more before seeing a relief rally. And SPY, same thing. We do have that red candle and an oversold signal right here. So good stuff. I'm going to leave it at that because I am losing my voice. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys on Sunday night.